You have found Authentic Business Adventures, the business program that brings you the struggles, stories, and triumphant successes of business owners across the land. Past episodes of the Authentic Business Adventures program can be found in the podcast link at drawincustomers.com. We are coming to you from the Sun Prairie Community Radio Studios, underwritten by Bank of Sun Prairie. My name is James Kademan, entrepreneur, author, speaker, and helpful coach to small business owners across the country. And today I'm super excited because I always mention that the Bank of Sun Prairie underwrites these fancy studios, and I actually get to talk to the Bank of Sun Prairie today. Today we have Vince Hartman from the Bank of Sun Prairie. He is the Vice President Business Banker. Is that correct? Did I hit that right?
That's perfect.
Perfect.
Absolutely perfect.
And then you brought some friends today, Vince.
Absolutely.
We
I
have
brought two good friends.
We have a Vice President and Loan Officer, Nick Drewson. How's it going today, Nick?
Pretty good. Thank you.
And you are from WBD.
That's right.
Rock and roll. And then we have a guy that is so happy you guys exist because he got some money from you guys. Is that right?
That's right.
Awesome. We got Martin McNally, the small business owner of Right Bauer Brewing in Sun Prairie. So anybody that makes beer is pretty awesome in my book. So how are you guys doing today?
Fantastic. How you doing?
I'm doing well. I'm excited. It's been a lot of work to get you guys in the studio here, and we're talking SBA loans. So realistically, in my world, that's a good thing.
Absolutely.
So let's start with what is an SBA loan for the listeners that are just not aware.
Well, the SBA provides guarantees, and they provide programs to small businesses that normally couldn't get financing for numerous reasons, or several, or for numerous reasons. They couldn't get financing on more of a traditional basis.
Mm-hmm. Okay. So can you give me an example?
For an example, we could use the 504 program. The 504 program consists of we utilize Wisconsin Business Development. Nick, that's sitting next to me here.
Mm-hmm.
We utilize that program where somebody wants to buy their own building.
Mm-hmm.
They can buy it for as little as 10% down.
Okay. Commercial building.
A commercial building.
All right.
And that's why we brought Martin here.
Martin. So, Martin, you started Right Bauer Brewing not that long ago. Is that right?
Yeah, about almost a year and a half ago.
Okay. All right. So, it's in business. How's business going?
Really good.
Awesome.
Yeah.
People drink beer, I
They do
guess.
drink beer, yeah.
Thank goodness. So, what made you decide to get an SBA loan? Was that just the best way, I guess? Or, I guess, tell me how you came across that.
I guess I read a book called Brewery Operations Manual. It's by Tom Hennessy.
Okay.
And they do kind of go through different, depending on what type of brewery you're trying to open.
Sure.
If you have rich friends, maybe that's how you get your money. But if you're somebody like me who, you're trying to quit your day job and open up a pretty big project like a brewery,
right?
Especially buying a building,
Mm-hmm.
that the SBA was the way to go.
Gotcha.
Didn't know too much about it outside of that.
Okay.
But I knew that was like the recommended way to go.
Sure.
And then that's when we approached Bank of Sun Prairie.
Sure.
They walked us through the process.
I think it's interesting that there was a book on how to start a brewery.
Yeah.
That just speaks volumes about the number of breweries that are popping up, that somebody thought, hey, there's enough people that are going to buy this book, right?
Yeah.
That's pretty cool.
Thanks.
I don't know of any how to start laundromat books or anything like that.
There's a lot of little breweries popping up around the country. So.
Oh my gosh, there's hundreds, if not thousands, right?
And a lot of them are first-time business owners. So
okay.
I think a book like this was it was short and sweet,
sure.
to the point, and they did a good job about getting equipment or
sure.
getting a loan or hiring and managing and everything like that.
So this is your first business, is that correct?
Yeah.
Okay, so this had to be a huge financial undertaking, which blows my mind that people do that for their first business.
Yeah. And again, that's where the SBA loan kind of comes into play, because we didn't have to put as much down for as big of a project as it was.
Okay.
Pretty much self-funded outside of
sure.
the loan, but
that's fair.
We were able to put our money together. And
all right. Did your friends help you at all, or they're just like,
just me and my wife. Yeah.
Okay.
Yep, just our savings, our life savings.
Sure. Funny story, baby.
Yeah.
I like beer. So I want to ask you something that I'm hoping, well, I don't know, maybe Martin, you can help me. When somebody comes to you, let's just say, for example, with the brewery business here, let me back up a step. Did you have any experience with brewery business, brewing, or?
Working in brew pubs, but no commercial brewing. But
okay.
I was home brewing for 12 years.
Okay. So are you the brewmaster?
I'm the brewmaster.
Okay.
As well. Yep.
So did you have to go to some fancy school in Germany or anything like that?
Nope,
or
just home brewing.
You just start a business and
trial and error.
Okay.
And,
I got a bucket, some water, and some yeast. Let's just see what we can make.
See what we can do. Yeah.
Okay. So then going to the SBA loan, was it tough to get that loan with no commercial experience in that?
Not working with Vince and the Bank of Sun Prairie.
Okay.
I mean, it's a process. There's paperwork involved, and
Sure.
But step by step, like this week we're working on this, next week we're going to do this, and
Okay.
we just kept going through the motion until everything was approved.
Sure. So I imagine this is very structured, I guess. Martin, you can probably answer that. Is there a checklist or a sequence of events that has to happen?
Yeah, absolutely. So whenever we are brought in on a project, typically by a community bank partner, we meet with them and the customer, and we kind of look at the project that they're looking to do, and then we have a checklist of items we need. But the big thing is probably the business plan, right? Is what is the project? What's your business? What are you looking to accomplish? And then it's, okay, based on that, what do you need for financing? And then we try to kind of start structuring different options that might be able to help them accomplish that goal. So certainly with SBA, there's quite a few rules. But that's where having kind of local experts that know those rules can help you out. I always tell people those rules create a box, and then we just need to work with everybody to make sure you fit in that box.
Okay. All right. So how many loans are you seeing in a given month or year?
Yeah, so, we typically do anywhere from 150 to 200 loans a year for about $100 to $130 million in financing. And that's typically on 30 to 40% of projects.
Sure.
So you're talking about, 300 plus million in projects getting financed across the state of Wisconsin under this SBA 504 program every year.
Okay. And is that the volume? Maybe you don't know the answers. I don't know. The volume of loans that you guys are pumping through in the state of Wisconsin, how does that compare to typical states with SBA loans?
Yeah, so we're a pretty active state. We probably usually rank in the top 10 in terms of SBA volume. So even though Wisconsin, market-wise is a lot smaller compared to the New Yorks, the Californias, it's an active market for SBA financing. And a lot of that's because we have good community banks who look to utilize those programs to help get these projects done.
Sure. So let's talk. You mentioned looking at the business plan, and I teach a business planning class, and I've seen business plans that were beautiful, and I've seen others that literally look like the top of a wedding cake. It's three-dimensional. It was crazy. There were no financials in that business plan. So can you tell me what are some things that you're looking for in a business plan?
Yeah, I think that, understandably the business is well thought out, but of course we're the numbers people, right? We're giving loans. So we are looking to those financials. We're looking to those projections.
Sure.
It's always the question of, are they realistic and attainable?
Sure.
And sometimes it seems counterintuitive to people, but we don't actually want to see the projections that show you blowing it out of the sky right away. Right?
Okay.
Because based on real life experience, we know that there's going to be a ramp up. There's going to be a learning period. So show me the conservative version. Show me that it works based on that.
Sure.
And then if you do better than that, great, right? But you're not dependent on that to make the project feasible.
Okay. Gotcha.
One thing that we saw when Martin and Erica came into the bank is experience. They understood the business. It was a fit. What I like to see is that Martin and Erica understood the business.
Okay.
They understand the brewing of the beer. But more importantly, it wasn't just somebody that said, I've never done this before. I think I'd like to open up a business doing this. For Martin and Erica, to me, the minute I talked to them, I felt like it was a fit.
Oh, nice. Okay.
And to me, a fit is probably one of the most important things because we have somebody that's coming in looking for money that understands how to brew beer and how to run a business that's got experience.
Sure.
I mean, as a banker, we get many requests throughout the year. Somebody that comes in and says, "Boy, I'd like to open up a cheeseburger stand."
Sure.
Have you ever run a business? No. Do you understand QuickBooks? No. Have you ever hired or fired?
Sure.
No. So it's not a fit.
Right.
Fit is a very important thing.
Right. That's fair. It's interesting to note that Right Bauer Brewing is across the street essentially from
The
your bank.
Actually, I can right out the window. I get to see them every day.
So, which means that it's in your best interest to help them survive and that you have a nice place, right? Because there's an opportunity cost that if they weren't there, another business would be there.
Well, I always look at it, any of my customers, anybody that walks in that bank, it's imperative that we find a way to make them successful.
Sure.
It's not we against they. It's everybody's in the same, everybody's rowing the boat in the same direction.
Sure.
I want Martin and Erica to be extremely successful.
Sure.
If they're not successful, I'm not successful.
That's fair to say. So can you tell us a little bit, Vince, about the whole idea of a community bank? Just because myself, I'm a business owner, but I still don't quite understand the difference between a huge national bank, a credit union, and a community bank.
Sure. So I like to say the biggest thing about community banking is we are locally owned, and we make all of our decisions within our four walls.
Okay.
Nobody's pulling us by the nose ring somewhere else, saying do this, do that, or follow these rules. We make our rules, we make our guidelines built for our community.
Okay.
All the money we make it stays local. We have local people, we have local employees. That money all stays local and gets reinvested, whether it's going out to lunch, whether it's going out to dinner, whether it's buying cars.
Sure.
The money stays local.
Yeah, I can see, the studio, you help pay for the studio.
Absolutely.
I can also say I was over at the baseball diamonds this weekend. I guess there's a bike trail there I was at.
Absolutely.
I saw you guys threw some money at that.
Yep.
So that's all Sun Prairie, right?
Absolutely. We're very involved in the community. We believe that a strong community, strong education, strong business owners makes a strong bank.
Nice.
Everybody wins, and that's really what we want to do is create an atmosphere where our business owners win, our education's strong, because it creates a strong bank.
Sure.
And everybody wins in a strong community.
Very true. Very true. So let's take it to you, Nick. Let me clarify here. You work with banks, like with Vince, right?
Correct. Yep.
So a consumer doesn't go to you.
Yeah, typically our project comes through a local lender,
Okay.
Be it a bank or a credit union.
Sure.
But then shortly thereafter, we're usually meeting with the small business customer, and then kind of we're working in tangent going forward.
Okay. So do you essentially Vince, do you hand off the loan to them over at WBD?
I do not. No,
Okay.
actually,
You're still rolling through
absolutely. Probably about 99% of the paperwork goes through us. There are some documents that Nick and his people will need, but I always like to stay involved.
Sure.
I like to stay a part of the project. Because if there's any hiccups, I want to be I want to be part of the problem.
Sure.
I want to be part of the solution. Excuse me.
Okay.
Yeah,
that's fair.
I should explain. So the program, the 504 program, right? A lot of people call it the 50-40-10. So
Okay.
what you have is you have a lead lender, in this case, Bank of Sun Prairie, who's going to do 50% of the project. They get to be in a first mortgage position. You're going to have SBA, who's going to be in a second position for 40%, and then you're going to have the small business owner putting in as little as 10%. So
Okay.
that's really where it is a three-party system, right? And we all kind of have to go through the process together in terms of generating, the required checklist items and then going through the required approvals.
Okay. So, Martin, I'm going to put you on the spot here in front of two people that help get you money. On a scale of 1 to 10, 10 being super awesome and 1 being I'll never do it again, where were you at with, going through the loan? How did you feel about it?
Oh, yeah. I mean, definitely a 10. I don't think we could have done it in the way that we did it without it. I don't think we had any other choice. But I do want to kind of emphasize again, we writing a very, very solid business plan with the projections. We spent over a year on it. We had mentors looking at it, other brewery people looking at it before we approached the bank. Again, a lot of this stuff is recommended. Online research and books I've read. That getting an SBA loan, you are putting less down, so they want to make sure that you have a very solid, structure and business plan. And that you did your research. And then I think also working with the local bank helps because they know the neighborhood.
I hope so. Across the street, right?
So,
we know it well. We know the neighborhood well there.
Sure.
Yeah.
So, Vince, can you tell me when someone comes to you with a typical loan? Well, let me back up a step. What is a typical, 10% you're saying is fairly low for would you call it down payment?
Down payment, yes. Yes.
So in a typical, if it was not an SBA-backed loan, what does a typical bank expect for down payment?
Depending on the specific project, 20 to 25%.
Okay. So
it can be depending, we might even go as 30. It's 30% down payment, depending on the type of project.
Sure. And a business loan, I imagine a small but typical business loan has got to be in the neighborhood of $100,000, couple $100,000.
Yeah, they can. We have business loans that are as small as $15,000-$20,000, all the way up to several $1 million.
Okay.
So it can be any range. It could be any range.
And what does SBA back? Is there a too small or too big, or what's the range there?
Yeah, the typical loan size is anywhere from $250,000 up to $5 million. So a fairly wide range.
It is a wide range.
With 504, because it's for fixed assets, real estate, and equipment, that's typically only going to play on larger projects.
Okay.
But the other program with SBA, the 7A program, certainly that goes anywhere from 25,000 up to 5 million as well.
Okay, so when you say larger projects, just so we have some numbers attached to that, what does that mean? Is that 500,000 and up, or 250,000?
I would say a larger project is typically $500,000 and up.
Okay,
is where
gotcha.
You start now. Below that, that's a standard loan. Once you get to $50,000 or less, that's when we start calling it, a micro loan.
Gotcha. Okay, because I imagine if we take a $250,000 loan, coming up with 10%, that's still $25,000, which is that's a healthy nut, right?
Absolutely.
You're talking 25%. Now we're talking $50,000 plus.
Yep.
That's a big chunk.
You're talking even several $1 million loan. Even 10% is real money.
Yeah.
That can be real money.
So is it rare, or I guess in comparison to the number of typical business loans, or I say a normal non-SBA loan versus an SBA loan, what percentage are we talking? Because it sounds to me like almost most of them would be SBA loans.
Well, we do run into we do quite a bit of financing where there's 20% down.
Okay,
it's quite a bit.
Sure.
It's a good part of our portfolio. But we do run into situations, or we run into projects where the 504 or even a 7A makes a lot of sense.
Okay.
Like with Martin's. Martin he talked about long-term fixed financing. We can do it. We talked about with less money down, we can do it.
Okay.
As a banker, we need to understand what you can do so we can build our project around it.
Gotcha.
It's always easy to say, I can't do it, but what can we do?
Sure.
And I think that's why we use the SBA is I think it helps solve problems.
Sure.
And not every business owner is sitting on several $100,000 cash, but they have a legitimate business plan.
From my experience, not a ton.
Not a ton, no. But we also have. But
sometimes it's surprising when you meet them. But you wonder, like, wait, what's going on?
But they have great business plans, and it's projects we want to be part of.
Sure.
When we saw Martin's project, we wanted to be part of it.
Sure, that's fair. That's totally fair.
And we said, listen, this is how we can do it. And we talked about it, and we had a lot of discussion about it, and we figured out that we thought this would be mutually beneficial.
Sure.
We get a loan. We have Martin as a great customer,
right?
And I believe at the end of the day he got the money he needed to do his investment
sure.
into his project, so it's a win-win. And if you can create a win-win situation, and Nick in the meantime got to help with the whole project in between,
right?
So it's a win-win-win.
Nice, very cool. So you touched on the fixed rate.
Correct.
Can you talk about that a little bit? Because that's a huge deal when you mention that.
So I'm going to start, but I might bring Nick into this, but when you have a 504 program, think of the 50-40-10. On the 40% that goes to the SBA, that you have an opportunity to get fixed rate financing for 20 or 25 years.
Both options are available.
Okay.
I'll let you talk about it then, Nick, from here.
Yeah, sure. So just on the 40% piece, on the SBA 504 piece, what's happening is, there's a lot of companies like WBD throughout the U.S. Right?
Okay.
And every month we're taking our projects, and those are getting pooled and sold as bonds on Wall Street. And the government actually guarantees those bonds. So institutional investors will buy those bonds, with very little returns, because you're basically taking default risk out of the equation.
Sure.
With the government guarantee behind it. So what that allows us to do is turn around and lend that money to a small business owner like Martin at long-term fixed rates that really aren't available outside of this program.
Okay.
And so what we're doing is we're helping Main Street access Wall Street, right, with a government guarantee, and getting them some really cheap, long-term fixed rate capital. So,
sure.
To give you an example, for a 25-year fixed rate bond that's sold in January, it had a fixed rate of, I think it was 3.71%. So we're fixing for 25 years, at really competitive rates. In most cases, a bank can't even do that for a year.
Sure.
So I like to tell people, hey, would you like to put less money down and get better interest rates? Most
Right.
people say, sure.
Yeah.
Not
today, maybe tomorrow.
You go buy a house, you only put 10% down, you get private mortgage insurance, you
Sure.
pay for it.
Mm-hmm.
Really here, it's not only are you putting less money down, but you're getting some favorable fixed rate
Gotcha.
financing as well.
So how many? I'm just trying to think here. I have so many questions, and I'm trying to just sort this out in my head. Is that specific? Or it sounds like that's specific to your portion. So the other 50% portion on the bank's end, that is not fixed rate, or can you help me with that?
So my portion, I have a 10-year term on,
Okay.
which means I have to stay in the project for 10 years.
Okay.
After that 10 years, then we go to a little more traditional financing.
Okay.
But
it can be fixed for that 10 years?
No.
Okay. He's
No.
like,
No, we can't.
No, let's not go crazy, James.
And no, we can't fix it for 10. But what we do is we typically do a 5. It's a 5 year, and then we do another 5 year after the first 5 years.
Okay.
It adjusts.
So that's what I'm used to.
Yes,
I wasn't used to the 20-year fix. I was like, I've done 5-year fix, but 20-year.
We'll do 5.
And business is cool.
And then we'll readjust for the next 5.
Okay.
So we're in it for 10.
Okay.
Our term is for 10 years, so it won't balloon for 10 years.
Gotcha. Okay.
But the nice thing is the bank has a big interest in staying in the project.
Mm-hmm.
So after that 10 years, it's not goodbye, Martin. We're not interested in it. That's not the case.
Okay.
Matter of fact, it's a direct opposite. You paid good for 10 years. What do we do? What do we need to do to keep your business?
The last bank that I got a loan from, they did not ask that.
Well, I'll tell you what.
They
I
told
don't
me
want
to go pound sand.
I don't want Martin to go anywhere. Trust me. I hope he never goes anywhere. I'm going to do whatever I can take to keep him.
The lending thing is so interesting because I'll just tell you a quick story. I got a loan for a building. This is for a business that I had, I don't know, let's call it 8 years ago.
Sure.
I buy this building, and we're talking $100,000, right? The loan, I had to throw 20% down. I think it might have been able to throw more than that. So anyways, the loan I think was like $72,000, which I did have many banks tell me, no, that's too small. Like they didn't want to touch it because
Really?
it was, oh yeah.
See, that's where a community bank would come in because to me, it's a relationship.
Yeah.
And we would do that in a second.
I was not smart enough to reach out to you guys.
And I mean, any community bank would do that in a half a second.
So I ended up with this other bank, and this was right around the bad real estate time, like 2008, 2009, something like that. And apparently the guy that did the loan for me didn't do his paperwork correctly or at all. There was no appraisal. There's all this other stuff that I didn't know anything about that he didn't do. So, and I had it was, how do they call it? It was amortized over 30 years, but it was a 5-year balloon.
Yep.
Right? So I had a fixed rate for that 5 years. So I go to refinance. I think I went to refinance right around that 3-year mark because interest rates took a pretty solid dip. And the bank essentially said, nah, we're not interested. Now, keep in mind, I had good credit score. I had made all my payments on time. I didn't make any mistakes. And I didn't know that the banker guy didn't do his job, that he didn't follow suit, right? And he didn't work there anymore. And so I was like, well, I was expecting just a 10-minute, yeah, sure, no problem. Here you go, sign this paperwork, move on with your life. In business, that's what you're hoping just about everything is.
Yep, fast.
Actually, in real life, I guess I'm hoping that too.
Sure.
Anyways, I was like, what do you mean we can't just refinance this? And they told me essentially, between the lines I read, from their point of view, it was a bad loan because they didn't have the paperwork that they should have. So they just wanted it off their books.
Well, that's not your fault.
Yeah, I was like, oh, now I got to go shopping for a loan. And I wasn't expecting to have to do that ever.
You wanted to just keep it at one bank?
I wanted to just, keep it at one bank, which it turns out this bank, their service was terrible. So when I told my wife, hey, we have to get a different bank, she was happy.
Well, we don't ever want to hear people say that they're happy to leave our bank. That's
I mean,
never. Never.
There's more stories at that bank, but it doesn't matter. It's not you guys, so it's all good. So I want to ask, from a checklist point of view, between the two of you, Vince and Nick, is there any time that you guys have some opposing ideals? I can't think of any, but I'm just wondering if there's something that you would see in a business plan that Vince would say, like, yes, this is super awesome, or not, and Nick, you would say this is super awesome or not, opposite of Vince.
Yeah, I think mostly from an eligibility standpoint. Right?
Okay.
With SBA, we have more restrictions. So
Sure.
there are things that banks can do that make sense that don't necessarily work within our program. And a good example would be, let's say you wanted to go buy another building, James. But in that building, right, there was going to be 3 other tenants.
Okay.
So there was a bunch of third-party real estate rental income coming in. That's a great business move for you personally, but in SBA's mind, that now looks like investment real estate. And they're there to help a small business, not necessarily an individual buy investment real estate. So a bank might look at that and say, yes, this is a great deal. I like this, good cash flow. And we're going to look at it and say, it makes sense. It's just not a good fit for us.
All right. There's a percentage that has to be occupied by the business, right?
Correct. 51% if you're buying existing real estate. And then for new construction, you have to occupy 60% day one. And then you have to get to 80% within 3 years.
Oh, wow.
Yep.
Okay. What happens if they don't?
Well, good question. That nobody really
that's a big jump,
Nobody
right?
comes back and checks.
Okay.
But what they wouldn't allow you to do is go lease 40% of the building to somebody else long term on the front end. So, we certainly have those projects where there is a chunk of it that is subleased out.
Sure.
But SBA is in the business of helping small businesses. So really where I was looking to, in Martin's case, Right Bauer. Right?
Sure.
Not necessarily what is Martin's, rental income picture look like.
So outside of the, let's call it investment real estate, are there any types of business that you guys won't touch?
We can't do anything with religious affiliation.
Okay.
Which kind of makes sense. We can't do any nonprofits.
All right. There goes my televangelist stuff, right?
You're done.
Nonprofit. I'll just make a religion.
The hot button issue right now is kind of all the CBD.
Oh, sure.
Products and, some of the equipment even, we've looked at companies that make HVAC systems for, basically grow houses in Colorado.
Okay.
Or, the head shop that sells tobacco pipes.
Sure.
And those are industries that SBA, does not play well with.
I would call that a gray area for a lot of things, right?
Exactly.
I mean, that's because you still have federal law that's probably got
federal
some
law,
challenges.
and SBA is a federal program, so they're going to abide by federal rules.
Yeah.
And it's still illegal federally.
I had heard of a company that was a CBD company that was trying to trademark their name, and they were having a similar issue because federally it's not legal. So the trademark people said, hey, funny story, come back in 5 years.
Well, you've probably seen it on the beer side, too. I mean, you see a lot of these breweries kind of trying to do the CBD beer, and the FDA is coming and saying, well, you can't really do that. It's not illegal, but it's not regulated yet. So.
Sure.
Yeah, I did a little research on that, too, and the TTB, which it's like the tobacco, firearms, alcohol. It was pretty difficult to put CBD in anything because there's some have certain THC content and some also having to prove it. It was months and months of a process to get it approved, the recipe approved.
Wow, okay.
Before you brew it, and we're like, nah, it's not interested. It wasn't that big.
Let's just put pumpkin in one.
We thought it'd be like a fun, quirky thing to do, and it's way more work than it's worth.
Sure.
Yeah.
That's fair. So I want to talk to you, Martin, about what you have going on with your business. What made you decide to start your business?
I was working in software, and my wife was working in sciences, and I liked where I work and who I worked with, but I wasn't super passionate about that work. And I was homebrewing for a long time, and she asked me if I could do anything. What would I do? And I was like, I would open a small little brewery, like brew pub, like a neighborhood one.
Sure.
Small batches. Serve it by the pint. You get to meet the customers. You get instant feedback.
Right.
Kind of grow a little community, neighborhood bar. Mm-hmm. And at the same time, I get to brew beer, and I get to brew it often.
All right. So when you answered that, and she said,
why don't you do it then?
That's a cool wife.
That's right. Very cool.
I don't know if she was calling my bluff, but we got to work, and she's been my partner in the whole thing, too.
Okay.
She's very much more than 50% of the business as far as the work goes. So
sure.
Yeah, we were just grinding away, just getting everything in place, getting the business plan, getting the loan, the SBA loan secured, and finding a building, and construction, operations, everything. It's a lot of work.
So that's perfect segue because there's two questions I want to ask you. or two groups of questions, I guess. One centers around the business plan, how you got that together. And then two is in financing, how you figured out where you're going to go for that, and how you figured out how much money you'd need. So let's start with the business plan itself. Was this just you scratching on napkins, or did you get something formal?
No.
Did you get help?
I worked with a guy named Joe Watts, and I worked with him at JT Whitney's, which is a brew pub.
Oh, sure.
And he actually wrote he's a very, very smart guy. And,
okay.
He wrote a very good business plan about opening up a brewery in Sun Prairie, probably like 15 years ago, I think.
Oh, wow.
But he's really big.
It's ahead of the curve,
yeah.
huh?
No kidding.
And then he ended up being a head brewer, I think in like Portland, and he came back and he was like quality assurance manager at Ale Asylum, and I believe he's at Octopi now. But he shares a lot of his business plans and his business plan online for the whole online brewery community to look at, and he wrote a lot of great spreadsheets too.
Okay.
That you can kind of, and he made it universal, and he just shares it for free. Like he's just a giver, and yeah, you can kind of just plug in, the square footage of your space, how many seats that's going to be. You can kind of sort of calculate and work out how much beer you're going to have to brew on a weekly basis, and and it kind of can give you a good idea of what those projections should be.
Okay.
Obviously, every neighborhood's different. And,
sure.
So you have to take that into account too.
And 15 years ago, Sun Prairie is way different than current Sun Prairie, right?
Yep. So understanding how much traffic drives down Main
Sure.
Street, we're on Main Street. Just learning the neighborhood and the surrounding businesses, and incorporating that in your business plan too.
Okay.
Like, how these businesses can work together and building a community. And
I'm thinking Cannery Square didn't exist. And I remember we came to Sun Prairie about 20 years ago, and I was amazed that there were 3 quilt shops.
Yes.
I think.
Up to just a few, not too long ago, there were still quilt shops.
How many quilts are getting made in downtown Sun Prairie? This is crazy. And so I imagine, like, there was I'm just trying to think of all the bars and stuff like that were here. Even the brew pub industry was, I would consider, infancy-ish 15 years ago.
Yeah.
So that's interesting that he thought of that. That's pretty clever.
Yeah. I think there's a couple other breweries that tried to open
in Sun Prairie?
Sun Prairie, yeah.
Okay. I don't know. Maybe. Probably.
I have no idea.
Yeah. They're, I don't know.
Okay.
They kind of fell through for whatever
Well,
reason.
their beer wasn't any good, so
Maybe.
Get them out of here. I don't know. It doesn't matter. So you had this base business plan, essentially.
Yep.
And then did you tweak it on your own, or you and your wife, Erica, tweaked it, or how did that work?
Yeah. Initially, we lived on the east side of Madison, and we were looking to rent a space on the east side of Madison.
Okay.
And so
to live or business?
We were living there already. We were going to open the business on the east side of Madison. And, and we kind of went through commercial rental experience. And after looking over the numbers and what you're responsible for, we're just like, it would make a lot more sense to buy our own building.
Sure.
You're pretty much liable for everything anyways. And,
right.
And so we kind of went that route. The bank we were working with initially had no interest in purchasing a building.
Okay. Their loss, right?
Yeah, it was their big loss.
And so we went to the Bank of Sun Prairie, and they were very excited for us. And
sure.
They did. And same with the WBD. They're there to say yes. They want you to open up and be successful. And they just, like I said, just walk you through the process and get you through the steps. And
sure.
You might say, hey, maybe you need. I remember we had to adjust our projections just a little bit to dial them back. You don't want to be too.
Yep.
Sure.
Yep.
You hope for the best, and
there's good reasons for that too.
Right.
And we've been open for a little over a year, and we kind of every once in a while we revisit those initial projections. And and we're right on to where we're just a little above where we thought we would be.
The initial ones or the revised ones?
The revised ones.
The revised ones. Okay.
Yeah.
Perfect.
Oh, very cool.
Yeah.
So how, if you don't mind me asking, how did you come up with those numbers?
Like I said, Joe Watts wrote some really good spreadsheets, and you do have to adjust them. And, but it cut out a lot of the guesswork. Reinventing the wheel, but
sure.
Taking the capacity. How many chairs do you actually have in the bar? How often are those chairs going to rotate?
Sure.
On a Wednesday, Thursday, Friday, Saturday.
Right.
And then we were able to break down like, hey, we should expect to do X amount of dollars on Wednesday, Thursday, Friday, so per week, per month.
So are you guys closed Sunday, Monday, Tuesday? Or just people don't drink crazy?
Oh, no, we're just closed on Mondays. But yeah, so we're open Tuesday through Sunday.
Gotcha.
But yeah, just coming up with those projections for each day and each week, each month. And then you figure out what you can afford.
Okay. Is it based on population or traffic, car traffic, or how are you coming up with that basis, those numbers?
There's the what is it called? It's like the National Restaurant Association. I think. Okay. I think it's the NRA, but it's like
sure.
And you can get averages. Based on those numbers, like how much you can expect. So you do kind of take like a broad average of how often each seat turns over on a given day. So
we got, I don't know, what's there in Sun Prairie, 60,000 people, something like that, or?
And the traffic that runs past it every day. Okay. Absolutely. Take that all into account.
Yeah. Sure. There's an algorithm to figure out a ballpark. Okay.
Yeah. And then being on a busy street. I mean, there's a lot of variables.
Sure.
But yeah, just kind of taking like an average of how quickly things would turn over on average, and then you hope to be at least average.
Sure.
Being a craft brewer too, I think I would just go by the normal averages for any like bar restaurant.
Sure.
But then being a craft brewery, people do travel a little further to come see you. So I just kind of take that as a bonus.
Okay.
And maybe that's why we exceeded our projections just a little bit.
Sure. So not to get too far off the tangent of lending and stuff like that, but I'm curious, do you sell beer outside of your location?
We can. We don't do too much yet. I've sold a few kegs to neighborhood bars and restaurants.
Okay.
Just kegs.
Okay.
To us, it's on our scale, it's probably not that profitable to sell kegs wholesale.
Sure.
But it's good marketing, and so you're letting your product do the marketing for you as opposed to like writing a check to somebody else.
Sure. Gotcha. Okay, that's fair. So at the point that you had your loan, was that before or after you came to talk to Vince at the bank?
Wait, say that again?
I'm sorry, not the loan. What? The business plan. At the point that you had a business plan, like, did you prepare that before you went to talk to a bank? Or was that after?
Oh, yeah, absolutely. Yeah, we had a business plan already.
Okay.
And then when we decided to buy a building, we had to completely revise it.
Gotcha. Okay.
Before we approached the Bank of Sun Prairie.
So it's an interesting point there. What is the time frame, or how long did it take for you guys to dink around looking at commercial property and figure out that we should probably just buy?
Probably we were probably almost 2 years into the day we decided that we were going to do this, writing the business plan, getting a loan approval.
Sure.
And then we had to abandon that loan before we could even go forward with the next loan. So that was a little scary, but when we were approved for the first time, we felt pretty confident.
Okay. So when you say abandon a loan, I guess I'm not familiar with that.
We couldn't apply for another loan.
Gotcha.
With the Bank of Sun Prairie to purchase a building.
Sure.
Knowing that we already had this other loan from a different bank, because we'd be double dipping maybe or something. Like that,
So you essentially told that bank, hey, if you're not going to help us buy a building,
we're going to move on with this.
Go pound sand.
Sun Prairie thing. Yeah.
Gotcha. Okay. So then, what made you decide on Sun Prairie versus like Farland or East Madison or pick a town?
Looking at different spaces, I think Madison's probably just more expensive, and then
totally true.
We're in kind of a historic downtown area, and I love these small Wisconsin downtowns.
Sure.
So this is a building that I never thought I love our building.
Yeah.
It's 120 years old, tall
Holy
ceilings.
cow, is it really?
Yeah, tin ceilings, just beautiful, and they just don't make stuff like that before. We were looking at like strip malls.
Oh, sure.
And it was going to cost us more money per month. So,
all right.
Sun Prairie is also one of the fastest growing suburbs in the whole state. And it's just a great community. Really.
Sure.
Yeah, I'm super happy the way things worked out.
Very cool. Yeah. So did you buy the building that you're in?
We did.
You did. And up top is an apartment or something like that?
Yeah, there's 2 small apartments.
Okay. So does that fit in the whole 51% or something like that, or I guess how do they do that?
Loan, so it's
So I'm just curious because it totally makes sense, right? Because then you have other revenue coming in for your business, but it didn't even dawn on me that you have apartments up top that I assume the business is getting a nut from that, or I hope they are.
Yeah. A little bit, yeah.
Okay. But then, yeah, you got the retail on the bottom. So I imagine something like that I would think is fairly common for looking for a loan. Is that, am I out of line asking?
Yeah. No, I think so, absolutely. And that's where, again, because Martin was buying an existing facility, he only had to occupy 51%.
Gotcha.
And so, is there a basement in that building
there is,
that
yeah.
you guys use for kind of
the
food storage?
Oh, there you go. You got 2/3. You're all good.
Yeah.
2/3. That's right.
Most of the brewing system is in the basement itself. Yeah.
Okay.
Gotcha. Okay. So I want to talk to you about the figuring out your number. Because I talk to people with business plans all the time, and a lot of times their number is fairly low, especially for a service business. Something like brewing, you got some huge, expensive equipment going on there.
Yeah. We did the best we can to, putting 10% down, but a lot of it we purchased even before.
Did you really?
Loan, yeah.
So you just knew, I'm starting this, we're buying the stainless steel tank or whatever.
And we bought it, picking some pieces used in the market.
Okay. I imagine as other breweries grow up or get bigger, they have their old equipment that they want to get rid of, right?
Yeah, in our case, somebody was trying to start a project in Illinois suburbs that was roughly the same size.
Okay.
And they just never could get it off the ground, and they were paying rent, and they just abandoned the project. So he needed to get rid of it cheap.
Nice.
He was paying rent, so I was like, I'll pick it up next
Happy to
week.
help you.
Yeah, before the next month, so he didn't have to pay another month's rent.
Sure.
And then, we had a garage on the east side completely packed full of
That's awesome.
tanks and
Sure.
tables and coolers and all sorts
all
of
right.
stuff.
Just waiting for you to find a chunk of property.
Yeah. Yep. Just looking for a place to plug it in. So
funny.
A lot of do-it-yourself stuff too. We did a lot of the construction ourselves too to keep the cost down.
Sure.
Pretty much anything that didn't require a permit, me and my wife did, and with we have a couple other partners too that are family that help out.
Nice. Very cool. So you came up with your number in your business plan, and you came to Vince. And Vince, I guess, how did you react? Were you like, yeah, it's a good number? Or how do you guys vet the number that's...
So in our first initial meeting, we talk a lot about background, more about the fit than the numbers.
Sure.
Or even the request.
Okay. This is where the whole character from the 5 C's comes in.
Absolutely. Right? That's and why do they want to do it? Why now? Why across the street?
Sure.
And it's a lot of... So we understand what we're getting into. And then what we do is, here's my business. They'll give you Martin turned over his business plan, his projections,
all right,
resume, and then we have something pretty unique in our bank. We call it a round table.
Okay.
And we'll sit around a table just like this. We'll sit and discuss projects, and we'll say, do we want to do it? Do we not want to do it? And these are the advantages of it. These are the risks. I mean, with every deal, there's risks.
Yeah.
And we'll talk about it, and maybe we talk about how important it is to the community. Maybe we talk about the background, the character portion.
Sure.
And everybody says, when I presented this, everybody said move forward. We like what we see.
All right.
We think it's important to the community. We think Martin and Erica were a good fit.
Yeah.
And we said that if we can get this done via the 504, we want to move forward.
Okay.
So we have analysts. We turn everything over to the analysts, and the analysts go through it, and they're a little pickier with the numbers.
So they're counting the beans.
They're counting the beans. That's exactly it. And then they do their write-up, and then we actually take it to a loan committee and get it approved, get the credit decision through our loan committee.
Okay, so there's a committee on top of the bean counters.
Well, our analysts look at it, so they're independent. They work with the bank, and their job is to pull together a write-up so it looks,
gotcha.
They do the cash flow, and they pull a lot of information from the business plan to do a write-up.
So from my point of view as a business owner, I've helped some people or guided them to start businesses and get loans and stuff like that. The whole analyst side seems to be like behind the curtain.
It is behind the curtain. You'll never see an analyst, never. Although you did see, we brought Andrew into it.
Yeah.
So sometimes what we'll do is if we get into a deal, we will bring the analyst along.
Okay.
So they understand the project, so they can hear it themselves.
They just seem like black ops people. Like you just never know that. You know that they're there, but you just never see them, right?
Well, they're an important part of what we do. I mean,
totally, completely.
It's without them, our hands are tied.
Okay.
You want people to look at it independently, and you want them to look at it and find the good and the bad. I mean, a lot of this lending it's easy to look at the good and say, yeah, let's do it.
Sure.
But you got to look at the bad. What are the risks, and how can we offset them? How can we mitigate them?
Sure.
That's my job, is to figure out how we can mitigate risk, but still lend money.
Sure.
That's when we bring in. That's where we bring in Nick, and Nick is an integral part of this. So basically, when I chatted with Martin initially, he said, "I've got this much money I can put down, and I build a project around that, and then I tell my people, that say, listen, if I can bring in Nick, and if Nick can get this done, are we comfortable?
Yeah.
Yes, we're comfortable. Move forward.
Okay. So Nick comes in, or you bring Nick in after roundtable, but before analysts?
I will bring Nick in before analysts, just because I think Nick needs to understand if this is a deal that's doable.
Gotcha.
If Nick looks at this and said, you know what, this is a pipe dream, it's not going to happen.
Sure.
Then I would have to go back to Martin and say, listen,
I'm going to shatter your dreams.
Yeah,
here.
this is not going to be a pleasant conversation, but those happen,
Right.
Not everything's unicorns and rainbows. It's not like that. But,
sure.
But if it's something Nick or the SBA can't get on board, then I go back to Martin and say, hey, listen, this is how I think we're going to have to retool a little bit. We have to step back. This is how we're going to do it. This is how we can do it. And he tells me yay or nay.
And from Nick, now, Nick, do you get something from Vince here? Do you say yay or nay, or do you bring it to your table, or how does that work?
Yes, we have a very similar process to a bank in that we have credit analysts and we have a loan committee that meets every week. So, I think Vince and I have both been doing this for a very long time. So, whenever we're bringing a project in, we believe it's a project that should get approved.
Gotcha.
Based on our collective experience.
Okay.
But yeah, we also have kind of a credit presentation that's put together, and it ends up being this 30 to 40 page document, which really covers the business, the individuals, and I think Vince kind of hit on it, right? What SBA does is it helps mitigate risks.
Sure.
So it's helping projects get done, today that otherwise might have to wait, for a couple of years until more money can be saved.
Sure.
And so, everything SBA does, right, is it's supposed to help with community development and job creation, right? So that's a huge thing we measure. And, WBD's been in business for almost 40 years. And when we look back at the projects we've worked on over that time, we've created, somewhere around 65,000 jobs.
Wow.
So that's huge. And so that's where, for us, we kind of look at it, from an economic development standpoint too, right? So a project like Martin's, it's, hey, you're going to take, in some cases, vacant retail space that's not being used, and you're going to turn it into a cash flowing business that's going to have employees, that's going to, and is going to improve the property. So there's really kind of, a lot of economic development that goes along with the program.
Yeah.
And a lot of times what we see, and you've probably seen it too, James, as a business owner, is cash is king, right? So it's you've got 20% to put down, but now you've got no cash left. And we were talking about it before the show, right?
Not ideal.
There's so many unforeseen things that happen, where you need that rainy day fund. So a lot of times when we're looking at somebody, like Right Bauer, we want to see that they've got cash in the bank day one, right? For that initial working capital needs. So you're putting 10% down on the fixed asset price, the real estate and the equipment, but now you've also got some funds set aside to help as you open and to help with that marketing. You got to hire people, you got to train them, you got to buy supplies, so that's just one of the big benefits. And even 504, you can't use this, but a lot of times people use the 7A program to get businesses start up working capital, because that cash is huge. And I always tell people, like, you can ask for it now, and you can probably get it. You can't ask for it after you've been open for 3 months.
No,
right?
you never buy a boat in the middle of a flood, right?
No, it can't happen.
At that point, everybody's saying, well, wait a minute, what's going on?
Sure.
Yep.
Yeah. I always tell people to get a line of credit before you need it.
Yeah.
It's hanging out, man. It's there if you need it, but the time that you need it, there's no time that a bank is going to say yes to you when you're in crisis mode.
You can't get flood insurance when it's been raining for 4 days in a row. It just doesn't happen that way.
Funny, can we backdate that?
Yeah.
Yeah, cool. So are you, when you or your crew, I guess, over at WBD feels that it's not a fit, Nick, do you say no but or yes if, or how does that work?
Yeah, I think it's both, right?
Okay.
I mean, sometimes it's, if you want to do this, it could work, you know, and a lot of times it does, right? It's there again, there's a box, and so we got to fit you in that box.
Sure.
But there are other times where, and a quick no is always appreciated, right? So, you're looking at a project, and if it's just not a good fit, you kind of tell people that up front.
Right.
And so they're able to go explore other options
out
there.
So I guess your crew can essentially say, hey, this, if Martin were to say, hey, I want a 300,000 square foot building or something like that for my brewery, you can say, hey, maybe if you dial back the size, we can figure something out. But at 300,000, it's not going to be a good fit.
Right. I think at the end of the day, there's always kind of just a level of risk and what's acceptable. And, a lot of times people, want to take it personally. And you're not saying you don't believe in their project. You're just saying it's an unacceptable level of risk. And, what you kind of have to explain to people is there's different sources of capital, right?
Mm-hmm.
And bank financing and along with that SBA financing is typically going to be your cheapest cost of capital, but it's the most risk adverse, right?
Yes.
And the reason for that is, if Martin makes $2 million next year, or he breaks even, we get paid the same thing.
Sure.
Whereas an investor, right, has way more upward potential, so they're willing to take on additional risk.
And family members can make Thanksgiving dinner a little challenging.
It does get awkward, right?
Sure. So that's fair. That's totally fair. So I guess, how long have you been doing this, Nick?
13 years now.
That's a while.
Yep.
Wow. All with WBA.
All with WBD. Yep. I started as
WBD.
one of those credit analysts.
Yep.
Backroom ops. I realized I liked getting out and drinking beer and eating barbecues. So
the rule when you were working there was you can't go outside, right? Don't talk to people.
That's right.
Just tell them you're a real estate agent.
That's right.
I saw what Vince was doing, and I said I want to do that.
Nice. All right. And how long have you been doing this, Vince?
22 years.
Holy guys, are really?
22 years, yep.
Wow.
Yep.
So you got some experience, and you've seen some businesses come and go. And
Yep, absolutely.
All right.
And you've seen enough people, and you've talked to enough people about their goals, what their projects are. You can get a pretty good idea.
Sure.
Talking to people,
Mm-hmm.
and like kind of going back to your question, like about with Martin, if you would have came in and said, I want 500,000 square foot,
Mm-hmm.
I'm going to be able to brew 10,000 kegs a year.
Yeah,
I don't even know what a big number is, but
Yeah.
10,000
millions.
I would say, can we crawl? Can we walk before we run?
Sure.
And I think a big thing that Nick and I want to understand, we want to make sure that the borrower understands the risk too.
Mm-hmm.
That not every deal, they're not perfect.
Right.
But if we get a feeling that the borrower understands the risk,
Mm-hmm.
and they understand that they've got to mitigate their risks too.
Yeah.
Because sometimes people come to us, and maybe Nick can even say this, but people come to us and it's all rainbows and unicorns, and there is no downside. And it's like, well, when people say stuff like that, that gets me worried personally.
They actually say there's no downside?
Yeah, I've heard people say that.
Wow.
I've heard the word no-brainer a million times.
Can't not make money on this.
No-brainer. I've heard the word no-brainer.
No-brainer.
And the thing is that's an impossible word to say when you're borrowing money.
Yes.
Because there's risk in everything.
Totally.
There's risk in everything.
Right.
So, and as long as the borrower understands the risk and understands it's important to walk before we run, then you know what? I hope Martin makes $10 trillion next year.
Right.
I hope he does.
We'll see.
That'd be great.
We'll have a better studio, right?
Yeah, that's right.
$10 trillion is better. Let's throw that money around this community. So I guess we got to end it here after a few little sayings here. Vince, how can people find you and talk to the Bank of Sun Prairie? Is there a website or email address? Or just...
You can email me
at
vince.hartman, HARTMANN, @bankofsunprairie.com.
Okay.
Or you can go to our website at www.bankofsunprairie.com.
Easy enough. Super cool. And then, Nick, does the world need to get a hold of you, or they just go through Vince?
You can go through Vince, or we have a lot of good information on our website as well.
Okay,
right?
what's the website?
We're the SBA experts, so it's just wbd.org.
Okay, wbd.org. And WBD means nothing.
It used to mean Wisconsin Business Development.
Okay,
but
I just want to tell people.
Yep.
They're like, what does WBD mean, right? It's the new CBD. It's just WBD. Leave it at that. Cool. And then, Martin, how can people drink beer at your place?
Well, you can find us on Main Street, Sun Prairie, but Right Bauer Brewing.com, and that's RIGHTBAUER.
Okay.
Brewing.com.
Nice.
Links to our social media stuff we're always posting on there too to keep you up to date on
Cool.
events and specials.
Cool. I like it. Well, thank you guys for being on the show today.
Thanks, James, for having us.
This has been super
Thank
awesome.
you.
I like to think that we have quite a few business owners that are listening, or potential business owners, I'll say, that could use this help. And this has been the questions that you guys have answered here helped me, because I know that there's tons of entrepreneurs that just have questions about loans.
Absolutely.
I don't even know what SBA means or that it's a thing.
Absolutely. Well, it's a good tool for us to have in our toolbox.
Yeah. Sometimes I scare them when I tell them they have to put money down for a loan. They're like, why do I need a loan if I have to put money down?
Right? I've heard that.
Well, it's a bigger loan, right?
That's right.
You're just using money to make more money. So it's all good. This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land, coming to you from the Sun Prairie Community Studios, underwritten by none other than the Bank of Sun Prairie. It's a magical place. If you're listening to this on the web, please like, subscribe, and share. My name is James Kademan, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for small businesses across the country on the web at callsoncall.com, as well as Draw In Customers Business Coaching, offering business coaching services for entrepreneurs in all stages of their business, including when they get a loan, right?
Absolutely.
On the web at drawincustomers.com. And, of course, The Bold Business Book, a book for the entrepreneur in all of us, available on Amazon and wherever fine books are sold. We'd like to thank you, our wonderful listeners, as well as our wonderful guests. We got a whole crew here. We got Martin McNally, owner of Right Bauer Brewing in Sun Prairie. We have Nick Drusen, Vice President and Loan Officer. You're going to help me with the Vice President. I always see that on bank people.
It makes us feel important.
Is it? 'Cause you have it too, right?
Yeah, absolutely. We're legends, right? In our own mind.
after this show, you are.
No.
And then we have Vince Hartman, Vice President, Business Banker over at Bank of Sun Prairie. That's a crew, right?
Absolutely. Thank you for having us.
The people that know people here. I like it.
Absolutely.
Find us airing at 103.5 Wednesdays at 1 p.m., Sundays at 2 p.m., as well as at sunprairiemediacenter.com. Past episodes can be found morning, noon, and night at the podcast link found at drawincustomers.com. Thank you for listening. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.